Day trading is a scam. Day trading will make you a billionaire. Day trading this, day trading that. You must have heard a lot about day trading via social media. Still, you don't know why some day traders are successful, why others are not. Of course, there are lies and there are truths of day trading, and we will talk about them in this video. But before we get there, let's delve into understanding day trading. If you have anything to do with trading at all, you know there are different types of trading, and day trading is one of them. Day trading is a fast-paced form of investing where you can buy and sell securities with one trading day. What's the aim? It's solely to make as many profits as you can from short-term price movements in stocks, options, futures, and other financial instruments. Typically, day traders use a combination of strategies and analysis, including technical analysis, which focuses on past price movements and trading patterns, and momentum, which involves capitalizing on short-term trends and reversals. Day traders are different from long-term investors. They are less concerned with the fundamental value of the securities and more focused on capturing immediate gains from market fluctuations. What actually drives most traders that go into day trading is its potential for quick gains. But even though that is true, it is also associated with significant risks. Day trading requires a solid understanding of the markets and the ability to make fast, informed decisions. Day traders need to stay abreast of market headlines, economic reports, and other factors that can influence stock prices throughout the day. They often employ leverage, borrowing money that can increase both potential profits and potential losses. As much as day trading can become a lucrative career, know that even the most seasoned day traders can hit rough patches and experience losses. And yes, you'll find day traders on stock markets and Forex, where currencies are traded. Let's give a simple example. Let's say a day trader has completed a technical analysis of a pair of currencies on Forex. If his analysis shows a pattern of rising in price on most of the days, the trader has a reason to believe that this is going to be one of those days. So if there is a chance at all that day trading can yield you good profit, then why is day trading controversial? The main reason is its profit potential, which is what is widely discussed amongst investors. There are other reasons why a lot of people won't agree with day trading, and one of them is many amateurs have been lured into day trading by those who know better, and in the end, most traders lose their money. Of course, that applies to those who trade without sufficient knowledge. However, there are day traders who make a successful living despite or perhaps because of the risks. Many professional money managers and financial advisors shy away from day trading. They argue that in most cases, the reward does not justify the risk. Moreover, many economists and financial practitioners argue that active trading strategies of any kind tend to underperform a more basic passive index strategy over time, especially after fees and taxes are taken into account. Before you eliminate day trading for the lies you've been told, you should know the advantages of day trading. First, potential for quick profits. As mentioned earlier, this potential is the biggest reason most people go into day trading. It's actually not a bad one, and that's because every decision you make as a day trader is a chance to make a profit. If every trade works out, note that the I in the if is a capital one, you can make money much more quickly than a normal investor. Second, easy access. Modern brokerage platforms make it easy to day trade compared to the past. You can set everything up using your own computer and a smartphone with low funds. Third, say goodbye to boredom. Day trading offers a level of excitement that you can't get from buy and hold investing. There's this rush you get from putting in the work and the whole research you make to land a successful trade. It's more impressive when you gist your friends and you talk about how your 100K has doubled in a single day than talking about doubling it in a year. So the excitement is also an advantage. Fourth, no overnight risk. Day traders usually close out all the investment positions before the market closes each day. As a result, they are not exposed to any further losses at night. Regular investors still hold positions and could lose money if something happens overnight when they aren't available to trade, like a breaking news report that hurts their portfolio, for example. Fifth, you can be self-employed. If you end up getting it right with day trading, you can make a living from it, or say, make it your primary occupation. That sounds pretty amazing, right? Careful. There are downsides of day trading. First, high probability of losses. Day trading is a high risk, high reward strategy. If your decisions don't work out, you can lose money much more quickly than a regular investor, especially if you use leverage. A study of 1,600 day traders over the course of 2 years found that 97% of individuals who day traded for more than 300 days lost money. Succeeding in day trading takes more than diligence and education, but a significant amount of luck. Second, fees and taxes. While trading costs are lower than in the past, you could still owe fees for certain types of trades, especially at high volumes. Also, you owe higher taxes than regular investors. If you sell an investment for a gain you've owned for less than a year, you owe a higher tax rate for short-term capital gains versus the long-term capital gains rate. Third, more stress. The market is not slow, and seeing your balance swing up and down can be very stressful, especially if your trades aren't working out. Some experts have linked day trading to a form of gambling, and I've seen how people get addicted to it. Addiction can put a strain on different aspects of life like health and relationships. Need I say more? Fourth, it is time consuming. Day trading requires a significant time commitment. Not only do you need to spend hours tracking and making your trades, but you also need to research the market and your strategies. It's also challenging to make money as you compete against all other investors, including professionals who work for major financial institutions. Fifth, it requires deep pockets. Financial regulations require you to have at least $25,000 in your brokerage account to be an official day trader. You may want to have even more to give yourself a buffer against losses and to have money ready for trades. As mentioned earlier, some people are successful with day trading, and that brings us to the question, who makes a living by day trading? There are two main divisions of professional day traders: those who work alone, called solo traders, or those who work for a larger institution. We'll start with the latter. Most day traders who trade for a living work for large players like hedge funds and the proprietary trading desks of banks and financial institutions. These traders have an advantage because they have access to resources such as direct lines to counterparties, the trading desk, large amounts of capital and leverage, and expensive analytical software. These traders are typically looking for easy profits from arbitrage opportunities and news events. Their resources allow them to capitalize on these less risky day trades before individual traders can react. Now, to the solo day traders. Individual traders often manage other people's money or simply trade with their own. Few have access to a trading desk, but they often have strong ties to a brokerage due to the large amounts they spend on commissions and access to other resources. However, the limited scope of these resources prevents them from competing directly with institutional day traders. Instead, they are forced to take more risks. Individual traders typically do day trading using technical analysis and swing trades, combined with some leverage, to generate adequate profits on small price movements in highly liquid stocks. All right, so we have discussed a lot about day trading, but what exactly are the myths about day trading? First, day trading will make you rich. Most day traders you meet will make you believe that you're guaranteed to become rich by day trading. The truth is, some traders will actually become rich by day trading, but the bad news is this isn't going to be the case for everybody. Becoming successful and wealthy from day trading requires a commitment. If you want to make it well, you need to learn the ins and outs and strategies other successful traders have implemented. If you're willing to put in the work and understand that Rome was not built in a day, then you have a good chance. Second, day trading is a scam. You must have heard this myth once or twice because there are people out there who want you to believe that day trading is just one big scheme. They believe selected individuals take on large positions in certain companies, try to build momentum for that investment, and then dump the stock once day traders have started piling in. While pump and dump schemes like this are real, there is much more to day trading. Traders take on positions because they feel they can take advantage of small price swings during the trading day. This could be because certain technical indicators show an upcoming price movement, or they might be higher than normal chatter about a certain company. Whatever the reason, day trading is a real investment strategy that can be profitable for some traders. Third, day trading doesn't need strategy. Another common day trading myth is that it's a lot like gambling and has not real strategy behind it. Yes, You could make a bunch of trades and hope for the best, but the most successful day traders have a strategy behind each move they make. They understand the markets and have developed a method to find pieces of data that can lead to successful trades. Fourth, you need a lot of money to start day trading. Some people believe that day trading is only for the wealthy. Yes, the dollar return on a 10% profit will be much higher with a $100,000 account than a 500 account. But trading with a small amount of money is possible. However, the one thing to remember when trading with a small balance is that your margin for error will be much lower. This is where prop firms are interesting. If you want to know more about this, check the link in the description to see the dedicated video. Fifth, you need a degree to trade. While day trading requires deep knowledge of trading, it has nothing to do with your level of education. All it takes is your willingness and dedication to learn all about the market, and you're good to go. Six, more screen will make you a better trader. Many screens are what some traders use to ease themselves. The truth is, having more screens can help you to easily understand and compare the charts, but you don't necessarily have to possess them before you can become a better trader. A screen is more than enough to take you anywhere, though it might be more stressful. Now that we have discussed the myths, what are the truths about day trading? First, amateur traders are easily misled. The trading gurus use some tactics to make money, and one of them is offering pricey courses and mentoring programs, promising to reveal their secret strategies for success. However, these programs often provide common information available freely online or rely on outdated techniques. The gurus profit more from selling courses than from actual trading, preying on the vulnerability of individuals seeking financial independence. Of course, there is not just bad in the environment, there's also some good courses. Second, day trading has an emotional and psychological toll on traders. Decision-making under pressure, continuous monitoring of market movements, and the possibility of suffering significant financial losses are all part of day trading. The mental and emotional health of traders may suffer as a result of this demanding environment. The gurus, however, conveniently downplay these challenges, focusing solely on the potential gains. Many aspiring day traders find themselves trapped in a cycle of stress, anxiety, and financial ruin. Third, the odds are stacked against you. Contrary to the gurus' claims, the odds of consistently profiting from day trading are overwhelmingly against individual traders. Studies have shown that the majority of day traders fail to generate consistent profits over the long term. This is due to factors such as high transaction costs, market volatility, and the prevalence of institutional traders with superior resources and information. To directly tackle the common question of, is day trading profitable? You need to accept that day trading is tough. A University of Berkeley study found that 75% of day traders quit within 2 years. The same study found that the majority of trades, up to 80%, are unprofitable. While some day traders end up successful and make a lot of money, they are the exception rather than the norm. If you're considering taking a leap, here's how to start day trading. First, gain lots of market knowledge and experience. If you attempt to day trade without an understanding of market fundamentals, you will most likely lose a lot of money than you'd make. A working knowledge of technical analysis and chart reading is a good start. But without a deep understanding of the market and its unique risks, charts can be deceiving. Do your due diligence and understand the particular ins and outs of the products you trade. Second, make sure to have sufficient capital. While you don't need all the money in the world to day trade, you need sufficient capital. Wise day traders use only risk capital that they can afford to lose. This protects them from financial ruin and helps eliminate emotion from their trading decisions. Adequate cash is required for day traders who intend to use leverage in margin accounts. Volatile market swings can trigger big margin calls on short notice. Third, learn trading discipline. Many day traders end up losing money because they fail to make trades that meet their own criteria. As the saying goes, plan the trade and trade the plan. Success is impossible without discipline. To profit, day traders rely heavily on market volatility. A day trader may find a stock attractive if it moves a lot during the day. That could happen for several different reasons, including an earning report, investor sentiments, or even general economic or company news. Day traders also like highly liquid stocks because that gives them the chance to change their position without altering the price of the stock. If a stock price moves higher, traders may take a buy position. If the price moves down, a trader may decide to sell short so they can profit when it falls. Regardless of what technique a day trader uses, they're usually looking to trade a stock that moves a lot. Day trading strategies. A trader needs to have an edge over the rest of the market. Day traders use any of several strategies, including swing trading, arbitrage, and trading news. They refine these strategies until they produce consistent profits and limit their losses. There also are some basic rules of day trading that are wise to follow. Pick your trading choices wisely. Plan your entry and exit points and stick to the plan. Also, identify patterns in the trading activities of your choices in advance. Let's talk about the common strategies used in day trading. Scalping. This strategy focuses on making many small profits on ephemeral price changes that occur throughout the day. A type of scalping is arbitrage, which seeks to profit from correcting perceived mispricings in the market. Range or swing trading. This strategy uses predefined support and resistance levels in prices to define the trader's buy and sell decisions. News-based trading. This strategy seizes trading prospects from the heightened volatility that occurs around news events or headlines as they come out. One type of news-based trading involves whether a merger or acquisition that has been announced will go through or not. Also, when a country is having an economic problem, traders understand it may affect the currency. High-frequency trading. This strategy uses sophisticated algorithms to exploit small or short-term market inefficiencies. To further help your day trading journey, let's discuss the best times to day trade. Day traders need liquidity and volatility, and the stock market offers those most frequently in the hours after it opens, from 9:30 a.m. to about noon Eastern Time, and then in the last hour of trading before the close at 4 p.m. Eastern Time. As to the best time to trade for profitability, theories abound, but what can't be disputed is the concentration of trades that book the regular market session. An analysis from the Jefferies Group showed that in 2018, 25% of average daily trading volume took place in the last 30 minutes of regular trading hours, excluding the closing auction, while 5.5% took place in the first 30 minutes. Lastly, we will look at day trading risk management. Risk management is all about limiting your potential downside or the amount of money you could lose on any one trade or position. So when you're considering your risk, think about the following issues. Position sizing. If the trade goes wrong, how much will you lose? Calculate your stop loss position and see if it's an amount you're willing to lose. Percentage of your portfolio. It is closely related to position sizing, but it has to do with how much your overall portfolio will suffer if a position goes bad. Losses. What level of losses are you willing to endure before you sell? And finally, selling. After making a profitable trade, at what point do you sell? In conclusion, regardless of what you know, it is important to approach day trading with caution and skepticism. The claims made by the professionals are often deceptive and designed to exploit the aspirations of hopeful investors. Instead of falling victim to the day trading scam, you should focus on long-term investment strategies, education, and developing a realistic understanding of the financial markets. Always keep in mind that true financial success does not come easily. It is built on sound knowledge of risk management, good discipline, and principles. Finally, before you take any steps, if you want to know more about the solutions we are offering, check our website in the description to learn more about it.